Hi folks, Lee Gettess here with the Market Sense for the week of May 7th, 2013. The charts I use come from the Trade Navigator software by Gettess. And our first chart is weekly bonds, and you can see bonds got hit really hard last week. They were truggling up to new highs when the monthly employment report hit stronger than expected, I guess you could say, and they dumped them pretty good. And they're continuing to dump down now. You would think the best resistance for this week would be roughly the 148 area right here. You can see they've come nowhere near that so far, and this level right in here around 147 doesn't seem to mean much. Support's down here near 146, just slightly above it, and we've got the old swing highs at 145.26, so let's say between 146 and down here to 145.16, which is where the middle Keltner channel is. Right in there is the most likely area for them to stall this week. If they're going to stall, there certainly is the possibility that they could just continue to break down from here because they did get jolted pretty hard. But my guess is that they will find some support and at least try to test, and then how strong the test is will let us know just how strong they are overall. I mean, if they get to going really nasty here, they could be down the 141 area by the lower Keltner and the old lows here. I'd be a little surprised if they're that weak, but surprised but not shocked, I guess is what I call it. It could happen. In stocks, we've still got this unconscious market that just refuses to back off. The best support is down here below 1595 at the upper moving average, and you can see they're nowhere near that, haven't been anywhere in that vicinity for the week. They're up challenging the 1625 area, which is the logical resistance. The next thing above that is probably 1640. But when we're looking at resistance here, we're just kind of guessing and looking for something that might be interesting. There's really nothing to sell against up there. At some point, they're going to break down and get back down to this mid-Keltner channel, which for this week is 1520, but it's moving up pretty rapidly. As I wrote to my daily clients, you've got such an unusual situation here. You've got a market making new highs, and nobody coming in to buy it because it's at those new highs. I mean, usually there's a big rush of activity because, oh gosh, the market's at new highs and it's very exciting and it entices a bunch of people to buy. That's really not happening here. And when you get that circumstance, when nobody comes in and buys, 85% of the time in history, that means we're making a significant top. This is different though. We've never had that circumstance when the Fed was doing their quantitative easing and buying all this outstanding debt. So we really don't know how they're going to react here. I just want to caution everybody that we got the Dow dropping 150 points a few days ago just on an erroneous Twitter rumor. If they decide there's really anything bad out there, I think it'll be really scary how fast this market can go down. The lack of activity just means it could work both ways. It doesn't always have to be up. Right now the trend's up, but when that changes, they probably won't send out any advance notice. So that's what we've got for you today. I hope you can find something profitable to get yourself into this week. Thanks for checking in to see what we think.